I'm Josh Duvall from Joshua Duvall Financial Planning and Accounting. Just wanted to bring you a quick video and an update regarding the new IRS details that have been released for retirement savings contributions and income limits. So I'll go ahead and link to the press release from the IRS.gov website, but I just wanted to kind of share a couple things with you because, as many of you know, obviously saving in a 401k, especially if you're getting a match, 401k or a 403b, especially if you're getting a match, is a very important way not only to build wealth for the future, but also to reduce your income, thereby reducing your income tax. So I just wanted to give you a couple of the highlights. Again, I'll link to the press release. You'll be able to find it below this video, but I just wanted to give you a couple highlights here from the IRS announcement regarding 401ks and other retirement plans. So because of inflation, now these things normally happen related to the CPI, Consumer Price Index. And so these types of numbers will move gradually over time. For the 401ks, 403bs, most 457s plans, federal thrift savings plans, those types of employer retirement plans, the amount that you can save has moved up to $20,500 per individual, right? So if you have a 401k and your spouse has a 401k, you both are able to max out at $20,500. Now that's up about $1,000 from last year. That's the 2022 limit. Okay. So that starts at the beginning, January 1 of next year. What's important to realize is that if you're age 50 or over, they have what's called a catch-up contribution. So your catch-up contribution, I just want to find it here on the for the retirement plans. The catch-up contribution has been left unchanged at $6,500. So what that means is that for those 50 and older, you can now max out at $27,000 per person on your 401k, 403b, 457. That's a significant amount. Now, obviously, you have to have the cash flow, you have to have the discretionary income in order to save, right? Because we all have to live and pay bills. So obviously, it's difficult to max out your 401k. But if you're in a space where you have the ability not only to earn a match, you want to max out the match, and if possible, you want to look at how much you're able to contribute into a 401k. Now, on the IRA side, things have stayed the same related to your contribution limits. So your IRA contribution limits have not changed. They're staying the same at $6,000 per individual for a Roth or traditional IRA. What has changed is the income limits that allow you to qualify. So if you're familiar with kind of the way that retirement plans work, if you're trying to make deductible contributions to an IRA, what that means is when you put money in an IRA, traditional IRA, it will actually reduce your income just like a 401k or a 403b will do. Now, you can always make non-deductible contributions to a traditional IRA regardless of your income status, but the sweet spot is being able to reduce your income by every dollar you put in. So those numbers for how much you're earning, whether you're a covered spouse, a covered employee, or have a retirement plan at work, or if you're looking at the Roth IRA, those numbers have increased. So I just wanted to share with you on the Roth side, because this is kind of an area where people are normally kind of right on the bubble, and this can make a difference for you. The Roth IRA for singles has increased up to $144,000 from an income range, which is important. For folks that are married filing jointly, the income phase out range has increased from $204,000 up to $214,000. So that income range has gone from 204 to 214. That's significant because that means that anywhere in that range, you can make contributions to a Roth IRA. So a lot of times you have couples that are kind of right on the ball, right on the point of about $200,000. The IRS has bumped that up, and it's a result of inflation. They also make similar changes with regard to Social Security payments and the income that comes from Social Security. So the reason why I'm sharing this with you is because it's always a good time to make a reminder, especially as we move into tax time here in the spring coming up. It's already the middle of November, so this year is flying by. Tax planning and retirement planning, they kind of go hand in hand. Many times the amounts that you're saving in your 401k, your 403b, your Roth, traditional, SEP IRAs, etc., they're directly linked to your overall tax bill. So the nice thing is that IRA and 401k, IRA and Roth IRA contributions, SEP IRA contributions, those individual retirement accounts, those things can be done after the end of the year. You have until tax day, April 15th, to make a contribution for the previous year. Now, 401k, 403b doesn't work like that. You have to have all your contributions in by the end of the tax year. But what's important to know is that if you're somebody who's kind of on the bubble from an income standpoint, if you have the ability to defer income into the next year in order to qualify for a Roth IRA, these are the types of investment and tax conversations that you should be having with your financial planner or financial advisor. So if you have questions about the new IRS rules, again, I just did some of the highlights. I'm going to go ahead and link to the full release here from the IRS below this video. But if you have questions, if you're kind of concerned about what you're doing for retirement, if you're saving enough, if your portfolio is allocated the right way, or if you have questions related to your tax bill, you're just getting hammered, you're always paying no matter how much you withhold, you're just having some issues related to taxes, I'd love the opportunity to talk with you. You can go out to my website, joshuaduval.com. You can fill out a form there, or you can shoot me an email, josh@joshuaduval.com. And I'd be happy to start a conversation with you. So I hope you're doing well. I hope you're having a wonderful fall. I hope this video has been helpful for you. Again, check out the link for all the details from the IRS, and we'll talk to you soon. Have a great day. Bye-bye.